Are current interest rates stopping you from moving forward with the purchase on a home? If they are, I want you to listen to these numbers and listen up closely because you may change your mind and you may get a little bit more motivated to purchase in the current market that we're in. We're going to use a $500,000 house as our example. If you took and bought a $500,000 house, put 20% down, that would put you borrowing $400,000 from the bank. Right now, current interest rates are about 7.375%. And so a $500,000 house with a 20% down with a 7.375% is going to give you a mortgage payment of $3,395 a month. Now, let's say you wait 2 years. The interest rates have dropped into the 5.5%, which is where the market makers are kind of saying the market is going to be headed when we do start to see the decline in interest rates. So let's say you waited 2 years, bought the same house. That same house is going to cost you about $560,000 because you're going to see about a 6% increase of value year over year. So now your $500,000 house is $561,000 with a 20% down payment and an interest rate of 5.5%. At that point, your mortgage payment is going to be $3,286. Now that's a savings of about $106 each month. More expensive house, lesser interest rate, you're going to save a little over $100 month over month. Here's something that you have to think about that definitely needs to be a major factor. If you take the same house and buy the same house today at $500,000 and then refi in 2 years when the interest rates go down, your mortgage payment will actually go from almost $3,400 a month down to $2,967 a month. That is now a $319 a month savings month over month. It is a $3,828 savings year over year, and it is a $107,000 savings over the course of 28 years. I didn't do 30 because you got to take the 2 that you own the property while we were waiting for the interest rates to drop. So that's a savings of $100,000 over the term of the loan in payments. In addition to saving the $100,000, you're going to save about $60,000 on the purchase price because the home is worth less today than it will be worth in 2 years. So if you purchase a home today, pay the higher interest rates for a couple months or a couple years, you're actually going to end up saving yourself probably a little over $150,000 by the time the home is paid off. Hope that helps.